Hi guys, I'm Nicola McKenzie, founder and mortgage advisor at Dun & McCarthy Mortgages. And in today's video, I want to explain how mortgage lenders differ on how they consider where your mortgage deposit comes from. Now, this is important for anyone considering applying for a mortgage because it can be the difference between an application being accepted or declined, depending on where your deposit is coming from. So stay tuned. Now, before we get into the detail of today's video, guys, I want to let you know that here at Dun & McCarthy Mortgages, we are property, house buying and mortgage specialists. We deal with lots of banks, from your high street names to your specialist mortgage lenders as well. And we can help to compare your mortgage options and give you detailed expert knowledge and advice on what the best options are for you. So make sure that you head over to our website, dm.mortgage, and book in for a free of charge appointment today. Now guys, before I explain the different sources of deposit and what may or may not be problematic to a mortgage lender, I just want to cover off a few key points. Now, lenders, when you apply for a mortgage, they will want to know where your deposit is coming from. Now, they're not being nosy, you shouldn't take it personally. They're being cautious. They're about to potentially lend you hundreds of thousands of pounds. They have anti-money laundering regulations that they have to adhere to. So they need confidence that they can trace that money back to its original source, that it's not the proceeds of any criminal activity, and that it's originated from legitimate sources. Now, it's not just mortgage lenders as well that are going to do these checks and scrutinise things. Your solicitor or conveyancer is also going to need to check the source of those deposits. And again, they will have their own anti-money laundering regulations that they need to adhere to. So you will be asked proof of your deposit, both from your solicitor, conveyancer, and from the mortgage lender. And as brokers as well, we initially have to vet that information before we send it to the lender, again, to make sure that you're not going to have an issue later down the line. And again, as mortgage brokers, we are subject to money laundering processes, and we have to make sure that we're doing our due diligence correctly as well. So one of the many things that we have to vet to again minimise the risk of an application being declined. Here at Dun & McCarthy, we don't want to send someone's application to a lender if it's going to get declined in the future, so we do a lot of the vetting and a lot of the checking up front. Now, where your deposit is coming from is a vital part of the eligibility process. Some banks will be happy to accept deposits from distant relatives, some won't. Some banks might be happy to accept a certain percentage of a gifted deposit, some might not. So again, this is all part of our assessment in terms of which lender is going to be most accepting of your situation. Now, let's talk about the main sources of deposits and how problematic they may or may not be in relation to a mortgage application. So first of all, let's look at savings. Now, lenders rarely have an issue with personal savings. If your bank statements can show regular deposits evidenced by bank statements from a legitimate source building up over time, then usually not an issue. Next, let's look at inheritance. So if you have received inheritance, then that's again usually not an issue, as long as you can show bank statements evidencing the money deposit in your account. If it's inheritance, you've already been paid, and or usually what might be required is a letter from the executor of the estate detailing the amount that you will be receiving if you haven't already received it. Now, the next common source of deposit is sale of a house. So if you're selling a property and you're planning on using the proceeds from that property to fund the next purchase, again, usually not an issue. Proof of the sale of the property, the funds when they hit your bank account on completion, usually may be required. Again, it would vary what evidence you need depending on the lender, but the fact of a sale of a house is usually not an issue if it can be evidenced. Now, the next common type of deposit that people might want to consider to buy a new property is in relation to raising equity from an existing property or from their main residence. So you might own a buy-to-let already, you might want to raise equity from it, or you might live in a residential property, you might want to raise equity from it or raise funds from that property to take it out in order to buy your next home. and rent out your residential property that you currently live in once you move into the new property. That's something called a let to buy. I've got a separate video that explains all about that, and it is a fantastic way for people to become investors, but check out the video. Really, I just want to talk about how that works in terms of using that as a deposit to fund a purchase, and if that's an issue. Now, usually raising funds from an existing property to fund a new purchase, again, that is a bit more of a complex scenario. Definitely you need to get in touch with us and seek advice. But ultimately, it's something that can be done. There are lenders that are happy to do this. Again, it would depend on affordability. So once you've raised the equity from the property, what will the rental payments look like? Will they be sufficient to cover the new mortgage? Some lenders might ask that your income is in excess of a certain amount to also be able to fund the payments in case there's any rental voids. So there's lots of factors to consider, but ultimately that is an option. And in that scenario, the lender, the bank of the onward purchase, would usually require, again, some proof of this. So that proof could come in the form of, they might ask to see the mortgage offer on the property that you're raising the funds from, and or they would want to see bank account statements once that money has been deposited into your bank account. So again, as long as you can evidence it, some banks will be okay with that. But again, it does vary from bank to bank. Now let's talk about probably one of the really common ways to fund a property or mortgage deposit. And this is probably secondary to people using personal savings actually. So gifted deposits. If you have a gift from somebody that you know, then how does that implicate your mortgage application? Now, if you're getting a gifted deposit from a close family member, so close meaning usually parents, grandparents, siblings, then most banks won't have an issue with that. Obviously, they would need some kind of signature from that family member to say how much they're gifting you and to confirm that it is a gift as opposed to a loan. So that's something that I also want to clarify. A gift and a loan are two separate things. When I talk about a gifted deposit, I'm talking about somebody that is giving you that money and they have no intention of you paying them back. That is what would be considered a gifted deposit. And like I said, most banks would ask that gifter, that person, to sign a letter of some sort to confirm that that's the case. Now, like I said, most banks are usually happy if it's a close family member, but some banks will restrict the percentage of how much that close family member can give you because they want you to also contribute some towards that deposit. Some lenders are fussy with this. They want you to show some level of commitment as well. So therefore, they may not accept a gifted deposit, even where it's from a close family member, if it's in excess of a certain percentage. Now, if you're receiving a gift from a distant relative, so a distant relative might be cousin, auntie, uncle, that kind of thing. Some lenders will allow that, some banks will not. So again, it will depend on the bank itself. And again, that's the whole point as to why you get advice, to make sure that your situation is not going to be problematic with the lender that you're applying to. Some will insist that the relative is a blood relative. So for example, if it's your auntie-in-law, that might not be acceptable with some lenders. But others, again, might be fine with it. Again, we have knowledge of which lenders will be accepting of certain family members' gifting deposits versus those that won't. So we would ensure to place you with the best lender for your circumstances. Now, if you're receiving a gift from a friend or from your employer, that gets a bit tricky. A lot of banks and building societies won't like that. The reason being is because there is a higher risk of fraud by banks accepting that. So some will, but again, very limited. And again, make sure that you get advice in those situations. Now, another point where gifted deposits are concerned is that some banks, if you're accepting a gift, let's say from common law partner as an example, or from your parents, then again, some banks will insist that that particular person has no interest in the property, i.e. they are not also then going to live in the property. Now, the reason why some banks have a problem with a family member gifting you X amount and also living in the property is because if you were to default on your mortgage payments and that bank tries to repossess you, They might have difficulties from a legal standpoint if that person has contributed towards the deposit. It's much trickier for the bank to force a repossession in that scenario than if that person hadn't have contributed a deposit. So banks that will accept that scenario might ask again that a disclaimer is signed by the person giving the gift, or some banks just might outright say no. So it's not to say that you can't get a mortgage if the gift is coming from these different places, guys. I want you to really take that away. That's not what I'm saying. The point here is that these situations are why you need to get advice, because we know which banks are more likely to be forgiving depending on where your deposit is coming from. And like I said, as long as that deposit is from legitimate sources, there's no criminal activity involved, etc., then usually there is a bank to fit that scenario. Now guys, let's look at personal loans or credit cards or other unsecured borrowing. Now, a loan in itself, depending on what type of loan it is, may not be an issue. For example, if it's Help to Buy scheme using an equity loan, then usually not an issue. But again, even with the Help to Buy scheme, an equity loan, which is a secured loan, so it's a bit different to unsecured borrowing. But ultimately, an equity loan, some banks do equity loan Help to Buy mortgages, not all of them do. But let's talk about unsecured borrowing. Generally, unsecured is not going to be okay. Borrowing money to borrow money, which is essentially what you would be doing, does not really create, I suppose, the best impression to show that you are financially responsible, or certainly in banks' eyes, financially responsible enough to then be responsible for a mortgage. You know, you have to bear in mind that they are lending significant amounts of money at the end of the day. They want you as a borrower to demonstrate some commitment to that purchase. And that is why usually personal loans and other unsecured borrowing is not going to be okay with most lenders. And just touching on my earlier point, if it is Help to Buy equity loan that you've been looking at, that you're interested in, then I have videos on the channel to explain more about the Help to Buy scheme. But that is certainly something you want to get in touch with us, because again, we will know which banks are happy to accept Help to Buy scheme, which banks are not. So we can again put you in the best position to make sure that the choice of lender your application is going to be successful with. Now, let's talk about deposits that are coming from overseas. This is a common question that I get asked by many of the people that I deal with. The money might be coming from an overseas bank account, or the money might be being gifted from a family member, but that has or lives overseas, so therefore has overseas bank accounts. Now, again, this is usually not an issue. What I would say is that it is obviously going to be trickier, potentially obtaining bank statements, depending who the bank is. But nonetheless, if we can prove that those funds, again, are legit, we can trace back where the money has come from in the form of bank statements, then usually this would be acceptable by most lenders. Now, finally, let's talk about vendor deposits. So vendor meaning that the seller of the house that you are buying is happy to contribute some or all of the deposit, or they have discounted the price of the property and you want to use that discount as part of the deposit. So this is relevant if you're buying a house that's below market value. In other words, the house is worth 300,000, but you're buying it for 200,000. That is £100,000 below the market value. As well, some people will be considering right to buy mortgages. So if you're buying your house from a council, from a local authority, then they might offer you a discount off of that property for being a tenant with them for X number of years. Some lenders will even go as far as to say, let's say it's a right to buy application, they might be happy to accept all of the local authority's discount, depending on how much it is, as your deposit. So you may not even need to contribute in some scenarios. Now, quite often I get people that are buying a house from a family member, and that family member, let's say it's a parent, has given their child a discount off the value of the property. Again, this is going to be fine with a select few lenders. Others will not accept that as part of the deposit, but some lenders will accept all of it as the deposit. So again, some banks would expect you to put or contribute money towards that purchase to again demonstrate your level of commitment. So usually if you are getting a below market value property and you're not related to that person, the bank would want you to contribute some of the deposit. If it is from a family member, some banks will do it, some banks won't. Some banks expect you to contribute some money towards it, some banks won't. So the point is, guys, it is complicated. You know, it is a minefield. You need to speak to us. You need to get advice. We will know who will accept that scenario, who won't. But ultimately, that's what we're here for, is to advise you on the best lender so that your application has got the best chance of being accepted. Now, lenders are fussy with where the deposit money is coming from. As I said in the intro, it's all the difference between a bank saying yes and a bank saying no. And sometimes people don't realise how much scrutiny that mortgage application is going to be under. So I thought I'd put this video together because I wouldn't want you to fall into that scenario. Now guys, we are here to help. So head over to our website and book in for your free of charge appointment today. It's dm.mortgage, and we will be happy to explain to you your options and let you know how your deposit or your circumstances overall look to put you in the best stead to get you the best mortgage options for your needs. And like I said, we deal with high street banks, specialist banks, we have exclusive products as well, and we can rest assured find you the best deal for your circumstances. So book in for your appointment today. I hope that video has been useful. If it has, make sure that you subscribe to the channel so that you don't miss any more videos from me, and I'll see you in the next video.